Joining us is Vaibhav Sanghavi, CEO at Ask Hedge Solutions. Vaibhav, good morning and welcome to the show. Hiral on the side. My first question coming to you is, what do you make of the current market scenario, the kind of euphoria that we saw probably last week and the start of this week on Monday? Cooling off did happen in terms of yesterday's session. However, how would you trade?
See, I think it was a much needed relief from a market perspective from the bottoms. But now what has been happening is, there is definitely a reason behind it, in the sense that we do expect that from an economic standpoint, FY26, in all likelihood, we would be surprised on the GDP growth on the upside. Why do we say that? Is because while this government has always been focused on investments and that is pretty much in place, what has got added is basically a good amount of welfare schemes along with incentives on consumption, or in terms of increasing the disposable income in the hands of consumer by some tax rebates. So what we do think is, in the coming year, a combination of both investments and consumption will probably surprise the GDP growth on the upside as against your expectations. Having said that, the relief rally kind of has happened. There are a few global variables which are out there still waiting to get settled. From tariffs perspective to global growth forecasts, we do expect that. I think that noise will also settle in, within few months, and that is where we will start seeing some amount of structural movement from a market perspective on the upside. Large cap continues to be pretty attractive, whereas mid and small cap, we are still cautious.
Okay, so Vaibhav, let's incorporate the other variables that could come into this mix. The street is watching out for the 2nd of April in terms of what could be announced in terms of reciprocal tariffs. Some kind of probably, initiating comments coming in with regards to pharma and auto, but no one knows as to what side of the banter will Trump lean on because of the mood swings that he has, right? So taking the tariffs into consideration, what is it that you should be watching out for according to you? Do you think avoid sectors like auto and pharma would be the best thing to do, or do you think they will be insulated?
No, of course, there is definitely an event lined up, no doubt about it. And it is best from a trader's perspective, it is best to kind of avoid at this point in time, let it come out in terms of the announcements. But from a strategic perspective, right, I do think that, this April 2, or probably the potential trade deal with us, can be a huge opportunity going forward. Why do I say that? Is because currently, looking at the way China has been imposed in terms of tariffs, I'm not witnessing any kind of major activity in terms of them arriving at a trade deal pretty soon. Probably it kind of increases our competency in some sense. And over a longer period of time, if we are able to, have that first move advantage, and in any case have a strategic kind of relationships going, which in our view, is the case. The benefits of the trade deal, along with whatever is happening from a macro perspective, from a tariffs perspective, I think from a medium to long term perspective, it's a positive for India rather than anything else. So while it may be temporary volatility in terms of what autos and pharma can kind of come about, but from a medium term perspective, I think it will be positive on an overall basis.
So we will be positive in terms of a longer term perspective. How are you looking at valuations of Indian markets at the current point in time versus what we were earlier? Because much cheaper it's compared to the last 3-4 months. But if that is the scenario, from a valuation perspective, where would you see investments happening now?
See, I think valuations, of course, from a large cap perspective, are looking reasonable. At the same time, what we also need to understand is that the valuations at this point in time, we are looking after these kind of earnings downgrades of forecasts. Now, as we look at GDP growth kind of resuming in the next year, my sense is in the second half of FY26 is where we will probably see some amount of stability to earnings and probably growth resuming in higher than expected is what I would assume. So valuations are a factor of both your earnings and your multiples, right? So if just by the sake of earnings growth, the potential of valuations to increase becomes a little higher. So my sense is we are at a comfortable scenario, and at the same time, we are looking at a backdrop where there has been considerable selling from an FPI perspective. So any kind of reallocation of money towards India in along with the domestic flow, which is continuing, I wouldn't be surprised that we may probably inch up in terms of the valuations, especially on the large cap. Small and mid cap, I'm still avoid.
Okay, so avoid a small and mid cap, but valuations look pretty reasonable or somewhat reasonable in terms of the large cap space is the word coming in there. But let's talk about sectors. Now that you're seeing the return of FIs into the country, do you think this is going to be sustainable? And if so, the usual trend is that you see, funds flowing into the BFSI space and the IT space. IT, I think people are still shying away from that sector, taking into consideration the kind of job cuts that are happening, probably the discretionary spends that are on the cut on a global level. But if so, do you think banking could be a space that the retail investors in India also should be watching out for?
Yeah, of course. I think, whenever we've seen in history as well, when FPI flow kind of comes about, banking and finance would be the natural ones where the money actually goes in, purely because if you see the banking and financial weights, it's more than about 25-30% in terms of their portfolio allocation. So whenever any dollar comes, 30% of it straight away goes to these sectors. And when we talk about banking, I think my sense is basically it is largely likely to go towards the top tier private banks at the beginning, and then probably percolate to the mid caps where there is decent sized growth opportunities with a clear eye on control of your NPAs. So, all in all, yes, BFSI is a sector to look at. And with respect to IT, which you mentioned, right? I think you typically seen that March quarter is generally a dull quarter, from the IT companies' standpoint. Along with there are few events in terms of the IT companies where guidance would be kind of announced for the next year as well. So it tends to be a little volatile, and probably historically it has been weaker. So we'll wait for April, March end quarter results to kind of get declared, the guidance being kind of issued, and then we'll probably take a fresh call, from an IT sector perspective.
Okay. And if, Vaibhav, someone wants to start investing at the current juncture where we are at, which sectors apart from BFSI or the major ones should one start looking at where you see value and growth?
Which I was just saying that consumption is a sector which we are kind of bullish. The reason being that the government has been, has implemented some amount of measure where it increases their disposable income. So in effect, I think this is a sector where the valuations have corrected. Two, the ownership is not much there, from a sectoral perspective. So I think the moment the earnings starts getting, positive on these sectors, you will see disproportionate increase in terms of the share prices as well. So that's something to look for, initially starting with durables, consumer discretionary, and over a period of time flowing into consumer staples as well. So, and lastly, from a financial services perspective as well, is a sector which we like. And from a longer term perspective, renewables is a theme which we've always liked.
Right. So the consumption space is something that Vaibhav is betting big on as well. Thank you so much for joining us on the show at NDTV Profit and speaking to us with regards to